Hello everybody, a very good morning to you all and welcome back to another live stream here at Taurex and Atmos. I hope everyone is enjoying what we're seeing at the moment. Hopefully with the volatility that we've seen, you've managed to get some good trades. I haven't actually really been active in terms of the trading scene over the last few days with Eid holiday and stuff over here in Dubai, so hopefully we're now going to see some opportunities coming from me, uh, which is a big task in this current environment, which is very tense. There's fear, there's panic, there's everything. It's been a crazy 48 hours really, and it's definitely been a crazy 12 hours with the current moves we're seeing. So it's good to be back, and I'm coming back on a very good day with everything that happened last night, and then obviously NFP tomorrow, which we'll talk about. So there is plenty to talk about today in terms of the news from last night, the potential market opportunities, and what we could expect going forward. Hello to those who have tuned in live with me. Kurtzon, hello to you. Bill, good to see you. Hope you're doing well. We've got Lara in the room as well. Hope you're doing well. Thank you very much for tuning in. And Osama, hello to you. Good to see you. All the usuals that have popped up today, and also hello to the people on the Discord channel. I know Jack's in there. I know Treehawk's in there, and I know there's a few watching on the Atmos Discord channel as well. So thank you very much for tuning in. I thought about how we could do today's stream and how it's going to work. To be honest, it's tough to know where to start, isn't it? Because there is news events coming out, and I actually have come to the conclusion that the news events that we go through, whether it's like, I don't know, ISM manufacturing PMI or inflation or something like that, doesn't matter. It literally does not matter to the markets right now. The only thing that matters is this man and what he's doing by igniting a global trade war. So I don't know if anyone watched I don't know if anyone watched the announcement last night. I actually couldn't help but laugh, to be honest. I mean, look, really, he's come out with a board, and the subsequent tariffs on those countries that are on that board. So it's it's crazy, to be honest. I've actually got a list here of the full list of Trump tariffs that have been put onto the different economies, and I thought about how to sort of explain this to people who this is new to them and they've not seen this before. I don't think none of us have really seen this before, but maybe new to the tariff situation. And you can get sort of bogged down in all the details in terms of what particular tariffs and what sectors are being hit and what sectors are being targeted. This is now turned into a widespread thing, a global thing. So for me, as traders, on CFD products, it's not about, for me, that you can do this. It's not about sort of picking what sectors or what countries are being hit the hardest. This is a global thing now. We've got globally, we've got countries responding, and we've got a whole list, as you can see, of countries being targeted by tariffs. So instead of focusing the time on going into the details of each individual tariff announcement, all I sort of look at it on is the more tariffs that are introduced, and therefore the more reciprocal tariffs, which basically just means a reciprocal tariff just means if I put a tariff on you, you're going to put a tariff on me. That's a reciprocal tariff. That's like a retaliation. The more of them that we see, the worse, the more risk off we are in terms of the sentiment. Risk off means Japanese yen strength, like you just said there, Lara. That's the reason why we see Japanese yen strengthening. That's the Swiss franc currency. That's a risk off currency. That's why we're seeing the risk off flows head into the Swiss franc. The stock market falling, that's a risk off sentiment, and gold increasing. So they're sort of four pillars really, and there's other things that move on top of that as well. They're sorts of pillars in terms of what we need to focus on. So instead of going into the details of each individual one, because it can be quite confusing and time consuming, I always look at it from a point of a general summary. The more of this that we see, the worse this is for the global economy. The more chance we then see a recession globally. Therefore, the higher chance of the stock market falling, and the higher chance that we see more flows into the risk-off currencies and commodities. That's all we need to know. The proof is there as well, right? Because if we look at dollar yen last night, we could see that we're sort of ranging. We did break down below this trend line. Break down below actually caused a break of structure. Retest here, move lower. Retest here, move lower. Big spike. That was the sort of the pump before the announcement. Then there came the big dump in the dollar yen price. That's yen strength, and it's not just on that. If I actually go onto the right thing, Japanese yen. If I scroll this across, look, you can see it. You can literally see it in what's happening in the price. You see dollar yen much lower, and then you see your risk-on currencies like the Australian dollar and the New Zealand dollar down heavy against the yen, 1.2%, 1.3% against the dollar, 0.8% against the New Zealand dollar. If you look at the Swiss franc, you can see that it's pretty much flat because the Swiss franc's a risk-off currency. So, if we look at the Swiss franc pairs, I'm not actually got. Oh yeah, you see the same thing. Look, dollar yen, dollar against Swiss franc minus 1.36%, against the pound minus 0.5%. Euro's not too bad. Canadian dollar 0.6 and the Australian dollar 1% down. So, going forward, if we now continue to see retaliations from the countries that Trump has put the tariffs on, for example, look at China's tariff rate now, 67%, 34% have been reciprocal tariffs, 67% on one of the biggest economies in the world. This is not a good thing, and it's causing a lot of risk-off trading. Therefore, we should try and catch on to the momentum of that, to be honest. Not that it matters, but the economic calendar today, we've got ISM services PMI, and we've got some inflation data out of this. I mean, who cares? I mean, this is the first time that I would genuinely say that, okay, tomorrow NFP, different story. That's a very important one, because if we get a weaker NFP, that's going to filter into much more panic selling because of the recession scares. Yes, we're going to look at that. Osama, the NAS, the US 30, German. Yeah, we're going to look at that. But to be honest, the data we've got out today, all we're going to see today is a reaction to what we saw last night, when it was announced. So, one of the best markets to take a look at here is the indices, it's the stock market. And we'll look at gold as well. We'll try and get a trade idea on gold. Well, I mean, we're now bearish, right? Big move lower. One of the most aggressive sell-offs that we've seen in years in the Nasdaq, and also on the S&P 500, etc. What happened here was the market. This is a daily time frame, remember? Briefly paused. Okay. Broke down below it. Retested it yesterday. And then boom. Another move lower. So again, this looks very vulnerable to me for a move down, potentially down towards 18,000. Where can we get that from? It's a bit quite difficult, because this is the news candle from yesterday. So it's a bit of a mess, right? Because you can see that we've taken out the sell side here and the buy side here. We could get today a rotation back in towards the middle, or we see an aggressive move down below. Now, I think if I was going to play it myself, I think I'd rather try and play the move at least down towards yesterday's lows, which is what, down at 18,600, because all of this is, we've now turned bearish on the stock market for the first time in quite some time. So I'm just reading what you're saying there, Lara. Wouldn't the Kiwi and the Australian dollar be good ones to consider, since they export a lot to China, so won't be as affected by what's happening with the US tariffs? Potentially, yes. It's a good point. And you imagine that there's not going to be any trade war between those two countries. So I hear what you're saying there, definitely. I think for me the best, in terms of the best pair to target as after all this, is dollar yen. I like dollar yen to the downside even more, and we're going to look at some like actual specific trade ideas on that, because I want to try and catch on to some more dollar yen downside. Because one thing that I've seen in this whole tariff situation is that since it's been announced, every single time we've seen tariffs be announced, it's not been good for the US dollar. It's actually been bearish for the US dollar, and you'd expect actually tariffs to be inflationary as such. But we're not seeing that in the inflation data just yet. So yeah. So yeah, you could target Kiwi and Australian dollar for that reason, definitely. Yeah, there's no reason why you couldn't. Okay, let's get rid of that. US 30 is a little bit of a mess actually, but you can see it's on its way down again. But you can just see how you can, by looking at the market structure of these indices, you can see what is the stronger of the three indexes. The US 30 you can see hasn't still broken down below a new low, whereas you can see the Nasdaq has. So it's definitely the weaker, and also the S&P 500 sort of sits somewhere in the middle of that. I mean, look at this. Move up higher. This looks really threatening today. We're already down 1% on the day, so it would not surprise me if we see first a rotation back up. So maybe we need to drop that down onto the hourly time frame actually. A rotation back up into the middle of this, maybe down, maybe to this level. Okay, but from there, I expect another leg lower in this stock market. Now I've said it loads of times that I'm not an active seller of indices. What I'm doing is I'm waiting patiently for this to fall. It's already fallen about 12% from the highs. I want to see 25-30% correction. It's crash, should I say? It's not a correction. Crash. If we see a 25-30% crash in the S&P 500, I think potentially that opens up, for me, how I'm looking at it is it opens up a potential buy opportunity of a lifetime. You don't get many times where you see a 30% fall in the stock market if you go back in history. Only in those biggest crashes, you know, the 80s, the dot-com bubble in the early 2000s, the global recession in 2008, COVID, that flash crash in COVID. These are like timestamps in history, and the one thing about all of those times is that when you look back at them, the only thing that was 100% accurate was the fact that it recovered and went further. So that for me is more of an appeal than looking to try and sell it, because often the biggest crashes that you see in the stock market, they also have the biggest corrections along the way, because the volatility is so much. What often you get is wow, you know, and then you get that, and then you get that, and it's like, it's crazy, and it's really, really hard to hold on to as a trader mentally. So I'd rather wait for this to bottom out at some point, and we see an end to all of this, and then we can potentially catch on a move higher. Okay, right, let's look at gold. So what will it take for indices to be bought again? Okay, I'll tell you what it will take. Three things. Inflation to be falling, or to be around the 2% target, but not because of a recession. So therefore we're looking at the jobs data. We don't want to see loads of unemployment. We don't want to see loads of a lack of jobs being created, companies laying off workers. That all, you see that all in like the non-farm payrolls report. That's why it's so important now. That's the first thing you don't want to see. Or if you do see it, what you want to see is it recover. The second thing in this situation, what you want to see is deals being struck between the two countries, two economies. So, for example, say everything goes crashing down and these tariffs have a massive impact on the global economy and we see a global economic recession, then you start to see the deals come through to try and recover everything. You know, the deals here, the deals there. That situation, basically reverting back to global trade again, that sort of thing. The other scenario is that we actually see the US, and Trump gets this right, Because there is a chance here. He's not doing this to crash the economy, right? He's doing this to create a stronger US global domestic economy. Who's to say that what he's doing now, we won't see that in however long it takes, a couple of years' time or something. So if we actually see a stronger economy form from things being more domesticated in the different economies, then again, that's another thing. We won't be able to tell that for quite some time. It's going to take some time for this to digest through, and therefore see, did Trump get this right, or did he get it horrifically wrong? I've not seen this work before. Typically, tariffs are a no-go. You know, they tend to cause a lot of trouble, because you're basically restricting trade between the two countries. But who knows? Maybe this is going to be better for the US. That's why Trump's doing it. We shall see. Okay, let's have a look at gold. Here we go, people. Here we go. So, gold has been to be honest, this is one of those lessons in FOMO. Because you can see what I'm about to show you, right? This is something that I tagged to everyone back in the 25th of March. So what was that? 2 weeks ago? 10 days ago? Yeah, 10 days ago. Where we had this triangle pattern where the price was being squeezed, and then we noticed that, look, breakout above, retest. Look how many across that next 24 hours. Look how many times it's added the support. We even had a little flush out of these lows, and it created one of the best buying opportunities in gold that we've seen since I traded, since that 10% gain I made on gold at the beginning of January. Remember that trade? It was exactly the same analysis. Exactly the same. So I missed it because I wasn't working on those few days, to be honest. I had people visiting, and I wasn't on the charts, and I missed it, even though I planned out an analysis. So very, very frustrated. It happens, right? And I could sit there and I could, cry about the fact that I missed this whole move to the upside, or I could look for some new opportunities, which, what am I going to do? I'm always going to look for some new opportunities. So where we are right now on gold is a period of consolidation. Again, what we need to wait for is the market. I always say this, when the market's topping out up here, don't buy it. Don't just get FOMO and press buy because you don't want to miss out on the move. Just wait for the structure to form. We're actually starting to see some structure form here as well. Now what I want to see do you see where we have this consolidation period, right? What we've got under these lows are liquidity. And what we've got underneath the liquidity is a nice demand zone. So that would be the way that I would trade gold, in my opinion, over the next, hopefully we can get that tagged in fairly soon. I'm going to be doing personally, just on my own, obviously everyone can do what they want with their trades, but for me, this is enough for a 1% trade, 1% risk trade on gold. So I'm going to put this in the Discord channels. Trade ideas. Gold analysis from the live stream. Why is that a demand zone? Let's zoom in on it. Look at the impulsive move that we had that came from that last bearish candle. It's an order block. It created imbalance. How do we know it created imbalance? Because look, you can see it in there. It created a imbalance of buyers and sellers from that move, and it broke above this structure high. So we've got a lot of probably people that have bought gold that have their stop loss sitting where these wicks are here, here, and here. So I think what we might see is a move down, flush out these lows into this demand zone, and then move higher. And a flush out of 3,100 as well, where I imagine a lot of people would have their stop loss. Because one thing is for certain, in this current environment, I'm bullish on gold. There we are. So that's my analysis on gold, oil. Do you remember this, Lana? Look at that, Lara. I sent you this a couple of days ago into this area of supply. Now trading at 2 to 1. No reason why we can't get a move down to 65. Yeah. Right from look where it came from. Right from this daily bearish or supply zone or bearish order block, whatever you want to call it. Absolutely beautiful. What do you mean, Assam? I'm not sure what you mean there. Swing signals any position for you. I don't know what you mean by that. Sorry. So that was beautiful. So for me, this is the thing about oil right now. In my opinion, Lara, is you can have a look at the supply inventories, etc., etc. I don't know how much it matters because what we're seeing in oil is it's being driven by the fact that we may see a tariff-fueled recession. Recessions aren't good for oil prices because it means that lower demand, obviously, for oil prices going forward. It typically means lower prices. Therefore, I think this is a potential and a one-way ticket back down to 65 again, if we continue to see these current narratives. And what I just want to do is I want to go through top to bottom on some clean charts, looking at some of my trend rider trades. So basically using these EMA 12s and EMA 36s. I don't think there's anything there. So just bear with me whilst I click through everything. Euro yen, pound yen, not really doing anything. Silver falling, dollar yen. Look at that. Wow. So I think there's a good dollar yen sell coming on this trend rider, as you can see. So I'm just going to set myself an alert, like sort of here. I'm just going to tag that as H4 trend rider. And in the academy, yes, lower demand for oil exports. Yes, that will mean lower oil prices, of course. Yeah. Look at that. Jeez, these markets are absolutely crazy. Can't see anything much on the 4-hour time frame apart from potentially 1-hour trend rider on dollar yen. USD Swiss franc definitely. USD CAD. The sell was there. Okay, not too much then. Look at the dollar as well. The dollar looks to me like it could be testing 100. We shall see. Yeah, not the only real trend rider that I can see is either the dollar yen 4-hour or the dollar yen 1-hour. So I might tag that as well. But I do need to check what the ADX indicator is saying. That's part of my strategy. So sorry if people don't understand what my strategy is. I will be putting it in the Trading Academy, and I will be opening up a premium group at some point, which will have sort of a small collection of traders who basically I'm going to give my strategies that I use to, and I'm going to be every single live trade that I use on those strategies. I'm going to be posting them. So I'm working on that in the background at the moment, but for now I'm just sort of putting it all out there. Okay, and I think that pretty much sums it up actually. So I've currently got the buy analysis in for gold. I'm actively looking for some dollar yen shorts as well, sells. Oil looks like it could be going down to 65 if we continue to see these current narratives. But I would say, to end everything, is that these markets are very, very volatile, and things can change the click of a finger. So I can come back tomorrow and the story's changed. That's the excitement, but that's also the nature of these sorts of markets. So just be careful when you're trading these markets. You know, keep your risk really, really tight. You know, you can make some really good profit in these volatile markets, but you can also lose a lot. So make sure your risk management is always properly defined before you're placing your trades, because these markets can be in profit and then you can get hit stopped out before you even know it. So just make sure you're being careful in these particular times. Okay, we have got just a small matter of NFP tomorrow, so I'm going to be back here. Sorry, I'm going to be back here streaming for an NFP breakdown in terms of how we tie NFP in with everything that's going on right now and what that could mean for markets going forward. So hopefully I will see some of you there. Until then, trade well, and if you do need me in the meantime, I will be active in the Discord channels throughout the rest of the day, answering any questions that you may have. Okay, take care, trade well, trade safe, and I'll see you soon.